What's going on, guys? Welcome to another Discord meeting. Tonight, we're going to dive a little bit deeper. I'm going to give you a few examples on what a follow-through day is. We did just have a follow-through day yesterday in the market, so we need to understand what this means for investors, swing traders, daily traders, and then from there, what we think the overall market's intentions are. After that, we're going to do a deeper dive on market tops. And I think you know where I'm headed with this, but here, let me smack you with this intro. $1,400 in less than 2 hours. All right, guys, welcome back. Listen, if you want to be a part of this, click the link down below. We have a link tree, and you're more than welcome to join us. It's a free Discord. You can join us. We got about 3, 6, 7, 8, I think 8 with us tonight. A lot of people wait until after the recording to watch this. That's totally cool too. But if you want to be a part of this, join up. It's absolutely free. We don't charge you anything. We just ask for likes, subscribes, and for you to use this beautiful charting platform. So click the link tree if you want to see this same charting platform. It's TradingView. Click it, stick it, see you later, bye. Let's jump right into it today. What are we here for? The follow-through day. And remember, if you're in the Discord right now, interrupt me at any time and we can talk about any questions you might have, or if you really want to know something, or if maybe you want to just bring up something, that maybe I haven't brought up, please do so. Everything is educational here. So because I like to go verbatim, so that way it's not just me just mashing a bunch of words together, I'm going to give you the 3 different definitions, and it's going to be pretty repetitive, and I want it to be repetitive because I want you guys to have a very specific understanding of what a follow-through day is. So first, what does Google say? In the stock market, a follow-through day, or FTD, you'll see us referring to it quite often. This is a fail. Okay, this is a fail. Let me bring up the ChatGPT one. All right. How it works according to IBD, a market decline. The market has to undergo a significant decline or a correction characterized by a series of down days on a general negative trend. So I'm just going to show you this here, guys. This would be a series of down days, right? We might get a little pop up here, but we're not making new highs, and we continue lower. We might pop up, but we're not making new highs from the previous top, and we're heading lower. So this is a downtrend, okay? Next is a market bottom. After a period of decline, the market attempts to bottom. This is usually marked by a rally attempt where the market tries to stabilize a stopped falling. So what we see here is this, in hindsight, is the rally attempt. We don't know it's a rally attempt yet, but this is in hindsight. Okay, but we see it's trying to stabilize here, right? But it doesn't have a rally attempt, right? Because we don't see anything huge happening here. So we're going to go on to what is a rally attempt. But first, we need to understand the decline is trying to slow here. Okay, it's trying to slow. Next up is the rally attempt. The rally attempt begins when a major index like the S&P 500 or NASDAQ rises on higher volume. And this is the key here, folks. Pay attention to this, okay? Because we have not been utilizing this very specific point. The rally attempt begins when the major indexes like the S&P 500 or NASDAQ or the IWM or the Dow or, there's any of your major indices, okay, rises on higher volume than the previous day, okay? This is typically called the day one of the rally attempt. And you'll see more nuances like this. Now look, this is the rally attempt right here. So it's falling. This thing was free falling. This is considered a rally attempt because of the higher volume here, much, much higher than the previous day, so much higher, okay? So the volume is typically called the day one of the rally attempt. So we're seeing this as day one. Why isn't this the day one? Why isn't this the day one? We could have considered this the day one, but this isn't really a big series because it's just landed right on its resistance, right? This would have just been considered a pullback, and then just a pushback higher, as this is more disturbing. As we look back here, you can see this, if it just pulled back to here, we would have been fine. But because we broke the 50-day moving average, that gets a little bit more concerning, right? So now we're looking for a rally attempt. Same thing with this. We break through, and right here is your higher volume. This is our rally attempt, all right? So now that we have a rally attempt, we're going to call this the day one. It's very important. Remember that this is the day one. Maybe I can try and paint this here for you. So we're just going to go like this. We're going to make it look really silly. So day one, or the first day of that rally. Okay, here's the first day. Now, next up, follow through day. A follow through day occurs on the fourth day or later. So you have to count them, fourth day or later of the rally attempt. On this day, the index must show a significant price gain generally. Now, this doesn't have to be 1.2%, but generally it's going to be 1.2% or more on higher trading volume. And get this, than the previous day. It says nothing in this or in Google or in IBD, which I will go over that definition here in just a second. But it says nothing about it being higher than the average volume. It just needs to be higher than the previous day. This is key here, guys, because we have been looking for higher than average volume, which would tell us we did not get a rally day in the SPY, we did not get a rally day in the IWM, okay? But what this is telling us, what this is suggesting is a follow-through day occurs when volume is higher than the previous day. So after the first day, okay, after the rally attempt, and then of course, within 4 days, or I'm sorry, after the 4 days, that is when we were looking for a follow-through day, okay? So higher trading volume than the previous day. This surge in price and volume indicates institutional buying and suggests that market may be transitioning from a downtrend to a new uptrend. And this is a very key point. Suggests that the market may be transitioning from a downtrend to a new uptrend. You guys are going to see here, we're going to go through all this, and there's going to be lots of hope, and I'm going to be, butterflies and rainbows and all that bullshit here. But you're going to see really, really quickly that things are going to change. My perspective is going to kind of change in this. I still have a lot of, I feel a little wishy-washy about the overall market, and I'll give my reasons why very soon here. But let's stay focused on the follow-through day. Confirmation of a new uptrend. The follow-through day confirms the rally has potential. Okay, that doesn't mean it's going to work, but it's saying it has potential to develop into a more sustained uptrend, giving traders and investors the confidence to start making new investments or increase their exposures to stocks. Okay, so back to number 3, the rally day, day 1. We are here on day 1. So within 4 days, 1, 2, 3, 4. So anytime after this, after the 4th day, we are looking for volume higher than this previous day. Okay, so we can even mark this out here. We can mark this volume right here. And now we're looking for volume that's higher than that day or the previous day from wherever the volume is, okay? All right, so we bring this back up, and then it says the follow-through day. A follow-through day occurs on the 4th day or later of a rally attempt. On this day, the index must show significant price gain, generally 1.2% or more, on higher trading volume than the previous day. So if we look at the S&P 500, we have day 1, the rally attempt, 2, 3, 4. Now we're looking for higher than average volume. This is not higher than the previous day. I'll just bring this up so you guys can see. This one is not higher than the previous day. This one is not higher than the previous day. This one, not higher than the previous day. But right here, bada bing, bada boom, we'll be making money soon. This is higher than the previous day. Now, if you want to get real technical, it is higher too on its 50-day moving average, on the volume, but that's not what we are looking for a follow-through day. The follow-through day is higher than average volume than the previous day. So technically, yes, this is a follow-through day on the S&P 500 as well. What's going on, Nalani? It's good to see you in the chat. Okay, so we do have a follow-through day. Okay, rally attempt, 4 days later, 1, 2, 3, 4. Now we're looking for higher than volume than the previous day. This was not higher, this was higher. Okay, so we have a follow-through day on the S&P 500. Now, we're going to revert back, and I want to bring up the follow-through day on yours truly, the IBW, Investors Business Daily. Okay, it's very important that we go through this. What's going on, Predator? It's good to see you. So the follow-through day concept, once again, a system developed by William J. O'Neill. If you don't know who William J. O'Neill is and you haven't read his book yet, I highly suggest getting How to Make Money in Stocks. It's an orange book. It's in our resource section in the Discord. I want to make it a requirement. Obviously, I can't go over there and look over your shoulder to make sure you're reading it. But if you like the way we trade, that's the foundation right there. Okay, that is the foundation. You need to read How to Make Money in Stocks by William O'Neill. I'm not making any money by telling you this or recommending this. $0. Okay, but if you are very serious about trying to make money in swing trading, you need to read William J. O'Neill's book. Anyway, system developed by William J. O'Neill, rest in peace, identifies an important change in general market downtrend from a definite downtrend to a new uptrend. A follow-through day occurs when a market correction when a major index closes significantly higher than the previous day and in greater volume. It happens day 4 or later on the attempted rally leading up to a follow-through day. An attempt rally takes place during a downtrend when a major index closes with a gain. The rally attempt continues intact as long as the index does not make a new low. Okay, so here's another piece of information. This rally, this follow-through day is technically intact until it breaks this rally attempt. So we could be stuck in this channel for days, weeks, hell, maybe even a month, guys. It could stay within here and still be considered a follow-through day rally is intact. All right, that could get real boring, but it's very true. The rally attempt continues intact as long as the index does not make a new low. Follow-through day variables include the index's closing significantly above 1% on increased volume, positive behavior of leading stocks. This is really important. We're going to go into this. Positive behavior of leading stocks and improved market actions regarding support versus resistance level. The most powerful follow-through day often happens day 4 through day 7 of an attempted rally. In the wake of a following through day, the market should continue to add gains in strong volume with breakouts by top stocks. This is further confirmation a new uptrend is underway. Okay, now before I carry on, and I'm going to go a little bit more into this, but do we have any questions? I'll take a little sip. Okay, there's a lot to ingest here. You're not going to, and nope, not everybody's going to get this on the first try. Okay, I've been focusing specifically on William O'Neill himself for about 3.5 years, 4 years off and on. You know, I kind of started with it, kind of veered away, focused on small caps, kind of came back to it, went back and forth for a little while, you know. So it's one of those things, you know, that you love it, you hate it, but you know, as a newer trader, you're going to kind of bounce around a little bit. But if you like swing trading, if it fits with your schedule, it fits with your personality, I highly suggest it. And you really want to learn this, okay? So again, I'm still, you know, I always say you're a loser unless you're learning, right? And I'm learning every single day because I sure as hell don't want to call myself a loser, all right? So we do have a follow-through day on the SPY. We also had it on the NASDAQ. If we take a look here, here's your day 1, right? Much higher volume here, okay? Rally day, we push up higher. We keep pushing up higher. We have a push higher, much higher than the previous day on volume here. All right, looking good. And now we're trying to sustain some of those gains, okay? Let's take a look at the Dow Jones. DJI, I think it is on this one. All right. I don't have the volume on this one, and I'm not sure which it is, but you'll have to just trust me on this. Actually, I could probably bring it up on this chart for you. Let me find it. I think it's important that we do this. There we go, DJI. And we can bring it up on this. Oh, it gets rid of it. All right, so I don't have the volume here. You just have to trust me on this one, I guess. But this also had a follow-through day the previous day right here. Much higher than the rest, higher than the previous volume, okay? So that is my outlook here on the follow-through day. And, you know, I want everybody to understand it is a concept. We need to also look at DIA, I think Stockalope just brought up. We can look up DIA. Is this part of the defensive stocks? Dow Industrial Diamonds, DIA. Is this the futures possibly? Industrial Average ETF, SPY Dow Jones. Yeah, I think this might be the spider. Okay, yeah. We'll take a peek gander at this really quick. So this is the Dow Jones. We'll just blow it up on the daily here. Here we go. All right, here you got your breakdown. Look at, here's the rally attempt right here. All right, then we got 1, 2, 3, 4. On the after the fourth day, we're looking for a rally attempt. Nothing here. This is much higher than the previous day's volume and the day before. So you can consider this the rally attempt. And now we have, or I'm sorry, the follow through day. And now we actually continued much higher today on DIA. Does that look the same for Dow Jones? I must have overlooked that. Yeah, look at the Dow Jones did really well today, guys. That's very nice to see. These are your big boats of your stocks right there, heading much higher, showing some strength, but we are at an area of resistance. Okay. Now, one thing I do want to bring up in this, guys, because we're talking about follow through day, it shows hope in the market, but there's a few things I just want to dial back a little bit. Now, all these little things that I have marked out here, we need to understand, guys, that these were all areas of resistance. I called out this area of resistance here. We blew through it. I called out this area of resistance here. We smacked right into it that day, and we pulled back hard. We pulled back very, very hard. Let me bring it up on the better charting platform. Here we go. And if you guys want this charting platform, just use my link, guys. This is the only thing that really helps me out. It's the only way I get paid is through this link. So if you want to help me out, use my link before you download this. It's absolutely free. If you do want the essential plan, it's only like $15 a month, but on me, I think you get the first month on them for free. The next month you get on me for free. So feel free to use it, guys. It helps me out a ton. Now, anyway, back to the resistance. Look at this area of resistance. I marked this one out, and we did this on a deeper dive for last week. We marked this out. We marked this out. Now, look, it blew through this one, This next one, it came right up into, and look at it, touched that damn line. I called this all out in the Discord. Touched that line, ripped right back down. Right back down. That was a big pullback. Pushed up much higher the next day. Kind of stopped there by end of day. Kind of stopped and teetered back or pulled back at that area. So it was showing that resistance was true. But the next day, it blew back up through there. Okay, came right back down and retested that same area of resistance. Because if it's not resistance now anymore, what is it, guys? It's support. Okay, so it broke through the resistance and it came back down and now used that as support. Okay, then we had the follow through day the very next day on Tuesday, and now we are holding those gains right now. So it looks very, very good. It really does. It looks good. Where's my next area of resistance? Really, the only thing that I can see in this area is going to be this price here, and it's not a high area of resistance. This is the 550 area. It's more of a psychological resistance than a technical area of resistance, but we can see we've smacked into it 1, 2, 3, 4, roughly 5 times, maybe 6. You can count that one too. So once we get up to this 550, that's going to be an interesting area, but we have to understand right now, this is the 50-day moving average. This 50-day moving average is an institutional area where people buy and sell a lot of their shares. So institutional ownership is probably looking in this area right now. That's why I say, sure, I'm risk on. But guys, I've scoured the market multiple times. I'm not seeing a lot of setups out there. What I am seeing, though, is what we're going to go into next, is a lot of your defensive stocks starting to stack up. All right, it's 9:24. We're going to carry on to the next one. So we've seen the follow-through day. We've taken a look at that. We're going to look at many, many other things. But one thing I want to say, and if you guys have your books here, I want you to turn to page 213. I'm just going to go over this really quick. I want everybody to kind of study this. So this, you guys can't see because you don't get to see my video until after it's been recorded. But in the book, How to Make Money in Stocks, on page 213, it goes over the historical tops for the further study, okay? The historical tops for the further studies. And it goes all the way back to 1955 and gives probably 80, I'm guessing 80 examples, maybe 50 to 80 examples, all the way to 2008, all the market tops in here. So you can go back on your charting platform and look those up and study those tops. And one thing I wanted to note on a lot of these studies, if we bring up this volume, we're going to focus on this volume for a minute, okay? I have good signs and bad signs, okay? A lot of these have blow-off tops here where there's a lot of volume traded right at the top. Here we are not seeing a ton of volume traded at the top. A lot of these, so there's 6, 7, 8, 9, there's 10 examples in here with showing the charts. And if you guys look at this, you'll see that a lot of your tops before they sell off are usually on much higher volume before they start selling off. And nothing I see here except for the 1987 Dow Jones Industrial Market top do I see average volume before the market fails. Okay. So when I look at this, you know, there's not a lot of high tail signs that this was the top. This was the blow off top. But the issue I'm having here is this is starting to look really choppy now. You see how tight these candles are? You know, where your average daily range on something like this is what, 1 point something percent. Let me take a look at this. 1.50%, which has been increased lately because I think the average is 1.3%, 1.2%. But the S&P 500, you can see how tight these candlesticks are, right? See how tight these are? And on big days when they move up, they're not as loose, right? Or they're a little loose. Look at these. See how choppy this is getting? Huge pullback down, huge pushback up. It's very, very volatile. And I don't like seeing that in the market. And that's one thing that William O'Neill points out, is that it gets very volatile. It gets very choppy. You know, I think what that is a lot of institutional ownership buying and selling into this last portion here. Okay. And then another, yes, that's the page, Predator. Very nice. So Predator put it in the water cooler chat. If you guys look, thank you for shooting that picture, Predator. That was awesome. And then above that, Dan Bob Dan, the Greatest Monitor Live, has put in the chat, the TradingView affiliate link that you guys can use to click on. Yeah, right here's the picture. I just blew that up on the screen. Yes, sir.
Show everybody where the water cooler chat is.
Sure.
So the new people may not know.
Yeah, so guys, if you take a look at my screen right here, you can go to the water cooler. This is where we're all at. We're all hanging out here. You can click this open chat right here. And then you'll get this sidebar that comes up. And then right here, your boy Predator has posted that picture that gives you a list of all the tops that formed. So this is a nice study guide. That's why I want you guys to buy this book. You know, this helps you determine the market direction, which is the M in Can Slim. Okay, which we're not going to go too deep into that. That's a whole nother day. Can Slim is a whole nother day. So it is getting choppy here, guys. It's getting choppy. I don't like it. We're at that 50-day moving average. But guys, I always say it pays to be positive. So I'm in this internal battle right now, this internal struggle. It really is hard for me, especially because, you know, I really wanted to buy down here. I wanted to call my financial advisor, say, hey, you know, let's just get a piece in the market because it was just such a big, you know, sell-off. So I have this internal struggle here. I'm not going to lie. It's not easy. You know, when you see these guys doing it, they're all going through the same thing. There's an internal struggle. It pays to be positive. That's my saying. I'm a bear with bull horns. I like to short too, right? So we have to look for the clues in the market. And that's why we study. That's why we look into these things. That's why we want to address these things. You know, what is a follow-through day? But what are the other concerning factors? And that leads me into my next thing. If we go over the sectors, guys, if we go over the sectors, we'll start to see right away, okay, that there are a lot of things that are not stacking up, okay? I have a sector ETF here. We went over the SPY. Here's the mid caps. Here's the IWM. It's still very close to its 50-day moving average, but it gave back most of its gains. Here's the QQQ, below its 50 still. Bitcoin looks like it's setting up for a bear pennant. So, okay, so here's XLB. All right, this is your mutual trust. Here's XLK. All right, XLK, this is your technology. Technology looks the exact same as the S&P 500 or the QQQs, okay? It's rallying on lighter volume. XLE, this is energy. I have always looked at energy as a defensive stock, okay? It's not really showing that it's doing much better than anything else, so we can knock that one out. Oil and gas exploration, it popped up a little bit here, but it's still on a downtrend. It's still not looking good, even with the war looming, okay? Even with the war looming, this oil and gas exploration isn't doing crazy. We also have this communication stock, which is still holding above its 50-day moving average. It has been a leader for months now, but it looks like it's just teetering. It had a big sell-off here, it popped back up. That's not looking too strong here, guys. This is a nice uptrend. It's broken down. It's trying to get back above there, but we're just gonna have to wait and see. Now XLU, this is a defensive stock. This is uptrending and riding its 10-day moving average. This looks like a cup and handle. This thing looks like it's getting ready to break out here, okay? This is a defensive stock, okay? And it's pushed up on higher volume. It's pulled back on lighter volume. It looks like a volume contraction pattern right here. This thing looks like it's getting ready to take off to me, okay? XLP, this is your consumer staples. Consumer staples is also a defensive sector, okay? What does that mean? Well, when you are buying consumer staples, that is saying, well, I don't know where to put my money, but people need utilities, people need food. These are your defensive stocks. XLV has been true and true on a beautiful uptrend for quite some time now. As you guys can see, if I finish drawing this thing out, you can see it's still on an uptrend. It broke through this, it came back, now it's retesting that area and it's heading higher. So the healthcare sector is still doing good. Why? Well, the government is still funding the healthcare sector. Why wouldn't it be doing good? We have we have the industrial, which has just been trading sideways for a few months now, about 5 months. It's been trading sideways, so nothing going on there. XLY, which is your consumer discretionary, it's almost below its 200-day moving average. Okay. If the consumer discretionary is not doing good, that's showing that people don't have the extra money right now to spend on their random fun products like cars and clothes. Okay. All right, this is your biotech. Biotech's been doing really well for quite some time, but now it looks like it's stuck in a channel here. Between 80 and 100, it looks like it's stuck in this channel. It doesn't look like it's going very far. It's still above its 50-day moving average, though. A few more here, guys. XRT, no, don't, actually that's retail. Retail's just trading sideways. XLF still looks like it's doing really well, above all of its moving averages. Looks like it's getting ready to break out, but because of this breakdown and buy back up, it's not showing that it's very strong in the overall market compared to like XLU, where we had a big sell-off, but it held its 10-day moving average. You know, so XLF looks like we do have a key point of weakness here. It's following the S&P 500, where XLU on that pullback, look, it pulled back, but all it did was retest its previous highs and held the 10-day moving average. So if we're getting a huge pullback in the market and XLU is what's getting bought up, I don't really care for the looks of that, okay? And then, of course, we have our real estate sector, and it looks like the real estate sector is doing really, really well. Why that's doing well? My first notion, and if you guys have something else that you might want to throw out there, I would say that people are trying to spread their assets elsewhere other than the stock market, okay? Now, obviously, if you're buying XLRE, you're buying stocks, so you're still in the stock market, but that is still spreading your asset into real estate. I'm sorry if I said retail, but real estate. So people are kind of spreading their assets out a little bit. Instead of buying a house because it's too expensive, they're buying the real estate sector. This sector, I don't know if it's going to really, following the decision by the S&P MSCI to split financial sector into two sectors, financial and real estate, due to its update sibling and XLF spinoff. So yeah. All right.
Dave,
so that's, yeah, please.
I think there too with the real estate, the market's also pricing in these September cuts.
Okay.
So
it's going to be cheaper for people to buy.
Yeah.
And
exactly.
and bringing that up, Dan, thank you very much for that too. Bringing that up, guys, if we bring up the cuts right here for September 18th, 64% chance that we're going to cut a quarter of a basis point and a 36% chance that we're going to cut a half a basis point. All right, so keep that in mind. There is nothing on this table that says we aren't going to cut, okay? And so far, this thing has held pretty well. It's held pretty true, okay? So that being said, we will be getting a cut in my understanding, unless something crazy happens. You know, like like all of a sudden the labor market's skyrocketed and everybody has a job. But as of right now, the labor market's struggling, okay? And that's why you started to see here a 50 basis points being on the table, okay? So those are my thoughts. Those are my thoughts on the sectors. Now, I want to go into a little bit deeper into the some of the individual names here. So I know one thing that everybody's been kind of keeping an eye on, and that's PLTR. If you're not aware what PLTR is, let me just read it to you, okay? Palantir Technology engages in the business of building and deploying software platforms that serves as the central operating system for its customer. It operates under the commercial and government segments. The commercial segments focus on customer working in non-government industries. The government segment involves in the providing services and customers that are in the United States government and non-United States government agencies. They have actually just came out with a piece of news back here sometime that they just signed another contract with the government. They're always coming out with contracts for the government. I didn't believe in this one, but this one actually is doing really, really well. And it looks like, they're continuing to get volume. The RS rating's at 97. And what's the average daily range on this thing? 5.9%. So this looks really good. This looks really good. Even on this big sell-off here, the earnings came back like a fiend and continue to trade higher. So everything is looking really well with this stock. Okay.
Dave.
Yes, sir.
This is my pet stock.
Is it PLTR? I know you've been watching it pretty closely, and you've gotten quite a few other people in the chat watching it closely.
They just recently decided to do a Microsoft, to work with Microsoft as well. So.
That's right. I forgot about that Microsoft deal. Actually, I was keeping a close eye on it because as Microsoft was going down, PLTR was still heading higher.
Yep.
All right. So
also with crowd shit the bed so bad.
Well, CrowdStrike is that is the yeah. That's the most recent one where they had a big issue. Yeah, they had a big sell-off here. Yeah, with Crowd, PLTR is going to gain a lot more users switching over to them because nobody wants their, medical fields and food industry to crash, right? So yeah, that's a really good point. Thank you for bringing that up, Dan Bob. Yeah, poor CrowdStrike. I'd hate to be that guy that sent the update out that crashed everything. I bet he's fired. But okay, back at it. Let's take a look at GE. Now, this is aerospace and defense. Why GE? What's going on with GE? They provide jet and turboprop engines as well as integrated systems for commercial, military, business, and general aviation aircraft. Okay, you can see that they're holding up above all of their moving averages right now. Okay, you can see their RS rating is still strong. So when you're starting to see things like this, it's not a good sign. We also have HWM. Thank you, Beef Stewie, for pointing this out. This is Homet Aerospace. Look at this uptrend. It's beautiful. It's also in the same space, engages in the development and manufacturing of lightweight metal products. It operates through the following segment: engine products, fastening systems, engineered structure, and forged wheels. All right, so things, when you start seeing things like this, it's never a good sign. What else do we have? AVAV, yeah, so these are all aerospace. This is still holding out well, still above its 50-day moving average. AVAV doesn't look nearly as well as some of the other ones, but yeah, these are all aerospace and defensive stocks. What did you give me, Dan, Bob, Dan? Where did you send that to me?
A private message.
Okay, thank you very much. So let's see what Dan Bob's brought to us. Look at this. So we got V, which is Visa, if I remember right. Yes, it's Visa. So a lot of people will tell you, when the stocks were for borrowing money and stuff like that, usually do really well in a downtrend. And that's very, very true. But this one here, Visa, does not look like it's doing really well right now. So that's a pretty good sign. We also have GS, which is Goldman Sachs. Why would Goldman Sachs be considered a defensive stock? Exactly. I don't understand that. PGR.
Credit cards.
What's that?
They're making a ton of money off credit cards.
Okay, I did not know that Goldman Sachs actually had their hands in credit cards, so excuse me for that. Thank you very much. Now, I do know that insurance companies do really well. They do really well. And PGR is Progressive. Progressive wasn't the only one. What's Allstate's? ALS, maybe? Allstate. Because I know Allstate did really well, too. Allstate's.
State Farm's looking really good, too.
Is it? Okay. Allstate. Oh, it's all. That's simple. Yeah, look, Allstate's doing really well. All of these companies that have casualty insurance and stuff like that, they always do well in these defensive stocks. Dan Bob put XOM, which is energy. Now I brought up energy. XOM is going to look exactly like XLF. So, it really doesn't actually. XOM is strictly oil. But it looks, man, this thing looks like it's actually getting ready to break out too. Look at this base at this top at 119, this uptrend right here you guys can see. And then with the tensions in the Middle East, if something were to happen, they're already talking about, certain spots being bombed where it's going to be more restrictive on oil flows. And that could be extremely dangerous, guys, extremely dangerous. For war setting up and for oil prices. So obviously, if it's harder to get oil, what do you think is going to happen to oil? When there is more demand for something and less of it, the prices go up. That's simple economics right there. So we need to be really, really careful with this. Wow. Thank you for bringing this up, Dan. I really appreciate that.
That energy has not been doing well, but oil has.
Yeah. Okay. Very good point. XLE. Yeah. So that's really interesting. So yeah, energy's not doing well, but oil is doing really well in this situation, or at least it looks like it's about to. If it breaks above this 8, yeah, go ahead.
Oh, I just wanted to say, if you wanted oil, but you want to short it, look up PBF.
PDF. Purpose Fund Corp. Oh wow, that looks quite similar.
No, PBF.
Oh, PBF.
PBF oil.
Okay. Oh wow, they're doing shit. Yeah, so XOM looks like, man, this thing is just a really good top. I really like this top. Yeah, you've been watching PBF for a long time, man, haven't you? Big downtrend here. Big downtrend. I'd have to wait for a pop to be able to short this thing, but I mean, with XOM looking like this, I wouldn't want to short anything. This is making new higher lows. If this thing gets tight underneath here, this thing could really explode. It could look something like this. I mean, actually, look at this. Look at this. It makes a bottom. It starts making new higher lows. It gets tight, right? It's not big and choppy like this. It gets tight, and then it just takes off and follows that 10-day moving average and goes straight up. I have a feeling we could have the same issue here. New higher lows. It's starting to get tight underneath this area. I really think, because look at this base. See this base here? Down right here? And now we're getting that same base right here. It's the same damn thing. Downward trend, a base right here. I'm going to mark this out. Now, this moves a lot slower. This moves a lot slower, guys, but I think it's important to understand that if you can find the right stocks, look at this right here. Here's a base on top of another base. I have a feeling, and this is a much bigger base too. I've been telling you guys about those monthly bases, where if they go longer, this can have an explosion to the north side, And if you look at oil over time, it's been heading up for quite some time too. So it's on a long-term uptrend. So just be careful with that, guys. Be careful with that. Really appreciate you bringing that up. But yeah, it's definitely defensive. And we could go over a few others. Here's Southern Company. It's definitely on an uptrend. Wow, hell. Well, what's the ADR on this? this thing. I wish this. I know it's not going to be, but the average daily range is only 1.75%. But this is looking like something that I would want to take for a long if it moved a little faster. But this thing is not. It's not a very fast mover. But look at this. This would be a beautiful stock above $88, for a breakout on volume. That would be nice. We have NEE, excuse me. Again, a nice cup with a beautiful handle here. Man, I'm telling you, Dan Bob, find me an average daily range this high, dude. Find me a high average daily range in oil. I need it. This is only 2.3%. I'm telling you, boys, quote me right now. If oil breaks out from this area on XOM, you're going to see some rip tater chip and bullshit going on. This is some pretty scary stuff right here. I don't like seeing oil like this, but at the same time, it makes me want to lick my chops. You know what I'm saying? So thank you very much for bringing this up. This is why I love this. I absolutely love this community, because when we do deeper dives like this and I ask a few of you guys to grab me some stocks, you guys never seem to fail me. So thank you guys so much for that. All right, is that everything I wanted to go over? I need to take a look here. Bear with me for 1 sec. Let's take a little peeky gander at what I got in the general. Let's see, follow through day, market analysis, and market top. Okay, so there was one last thing that I wanted to bring up, guys. So when we talk about the market tops and we talk about the follow through days, we want to look at the overall main leaders of the stocks. Okay, so this is another big reason why I don't care for this rally. Okay, other than it's choppy and other than it's at its 50-day and I want to see it get above this. A big issue here is if we look at our leaders, our Mag 6 stocks, because Tesla, I don't even know why they consider this a part of our Mag 7, but what's that?
There's a new seventh now.
What's that?
There's a new seventh.
No way. What is it? And how do I not know about it? What is it?
Berkshire Hathaway's being moved into it.
Oh, come on.
Nope.
Okay.
Yeah.
Was it BRK? BRK? BRK.B. There's A shares and B shares, but they should look the same, right? They're moving this into the Mag 7, are they?
Yeah, I think they're going to hit $1 trillion here pretty quick.
Very interesting. I'll have to think on that one, but very interesting. But anyway, what I wanted to bring up, guys, in the Mag 6, we're going to call it the Mag 6 for now because it's funny. If we go to Apple, okay, we'll look at the strong ones. We got Apple and Meta. Those are the only things that are really holding up strong. Apple's still above its 50-day moving averages, and it's above all of its moving averages, okay? And the moving averages are all headed to the north side. Meta is the other one that's looking very strong, but we're at an area of resistance, which is an all-time high. What does this look like to you? Dan Bob, this is what I would consider a head and shoulders pattern. You have your shoulder, you have your head, you have your shoulder. What's the next area to go? Mickey Ficky, we're going down. All right, that's at least, I don't really know if that's what's going to happen, guys. But when you look at something like this, this is the shoulder, the head, and the shoulder. The shoulders are both lined up as where the head is here, okay? Actually, looking at this pattern, I might actually look at taking this for a short if it shows a setup for me, okay? So I will actually write this down just so I keep that in mind. Now, this could be completely wrong. I could be completely wrong on this, but if you use this top and you can find a good area of a risk management here, you could have very high potential for reward if we do go into a recession or a bear market or a bigger pullback, whatever you will, whatever you decide, okay? So Meta's doing well, Apple's doing well. Now, if we look at all the other stocks like NVIDIA, that was a big leader in the market, right? And it's still below its 50-day moving average. It took a huge sell-off here. This was your main leader. Now, the only good sign is its last area that it broke out of, it did bounce off of. So that's a good sign, right? Microsoft, as we touched on earlier, you can see, is still below most of its moving averages. It's actually riding that 200-day moving average right now. And it looks like it's coming into some resistance right here. Okay, so that doesn't look too good for it. What are our other ones? Apple, Microsoft, Meta, Google. All right, so Google here, we had this pop up. Look how horrible Google's looking. Google is looking bad. Now they did just have some horrible news pop up. They're I think it's something to do with their monopolizing issues that they were having, or they can't use the search engine through Apple anymore. I don't know exactly what the news was, but maybe on Thursday when we go live, I'll have that piece of news for you. But Google's not doing good right now, guys. They really are not doing good right now. So we definitely need to keep that in mind. And let's see, Amazon. That's one I forgot. AMZN. Below its 200-day moving average? Are you kidding me? Wow, I haven't looked at Amazon in a little while, guys. Amazon's below its 200-day moving average. So these are our leaders in this market. These are our leaders. These are our leaders, and they are not doing very well. So this is not looking good for the overall market, because as William J. O'Neill states, that is a good sign that your market top is in, and we start to get a rally, but there's no leaders holding this rally. And what is leading is XLU, oil. That's a bad sign, you know. So now things could turn around tomorrow, guys. I'm a bear with bull horns. Okay, when things are bearish, I want to short. When things are bullish, I want to go long. But I don't want to be naive. I don't want to say, oh, we got a follow through day, so everything's hunky glory, let's go. No, there's been plenty of failed follow through days. Okay, there just hasn't been a market rally without a follow through day. So at least gives us an indication to look, to really be vigilant, to stay on our toes. Okay, so that's all I got for you tonight. But do we have any questions? Is there any stocks that you want me to take a look at?
I have an observation, if you don't mind.
Please go for it.
Can you go back to the SPY, please?
More than happy to.
This is why I'm still cautious and a little uneasy about the current rally.
Sure.
So if you go to the left of the top, that last little section before we topped.
Sure.
No, to the left, no, all the way to the top.
Okay, right
all
here.
the way to the top.
Sure.
Yeah. Now, little left, go left, go left, go left, go left hard. There you go, stop. You went too far, but that's fine. We were already noticing that something was amiss because we were not finding setups.
That is
this
correct.
whole period of time. Even though it was moving up and everything said go, we were not finding any setups, and the ones we did were failing.
Yes, that is such a good point, Dan Bob.
So we were already, and I was already starting to pull money out of the market. When the 19th came, it was really easy for me to pull what was left because I had already started.
Yeah.
I just felt it. It just felt bad. And it kind of feels the same now. Yes, there's a rally. Yes, I like the look of this rally, but I'm not big on the feel of it. I just haven't found any setups lately. I looked and looked and looked yesterday and today, and I'm just not seeing anything.
Yeah, it really isn't. It's not feeling right. And if we look at this rally, you can see not only we're at a resistance of the 50-day moving average, but if you look at this huge downtrend now, we take it off the top, we have this downtrend where we mark it off this top, and if we continue to pull it, you can see we're right into this. So I could very well see a sell-off. Now, I would love to be surprised. You know, I am always rooting for the market to go higher. I really am. But if we're not getting any setups, how am I supposed to make money in this damn rally? There's no way for me to make money right now. You know, now I could scour the market again, say tomorrow morning or maybe next week, you know, and see what's going on. But as of right now, you know, with the war looming over our heads, you know, with no good setups, with, you know, I think it was a really good point, Dan Bob. I really like that. You're right. We were seeing this beautiful uptrend. We were holding a 10-day moving average. We're breaking out, but we have no setups, and the few that we had weren't working out. And then it starts to pull back. Yeah, the 21-day moving average is when we got out. It was a beautiful thing too, because calling that financial advisor and having them pull out the majority of my money and trying to stay out of the market as a swing trader. This big sell-off, I missed this whole thing, guys. I was out of the market. I saved all my money while everybody else that was still invested, that was not paying attention, that did not understand the Stan Weinstein stage analysis, which I highly recommend you looking into if you haven't already. It's very, very simple. The stage analysis is only 4 stages. You can learn that in a day. Okay. Understanding the stage analysis and knowing we want to be out after a 21-day moving average break, we saved so much money by not being in the market right here. So much money. And, you know, Dan Bob's a survivor of it. You know, he's the first one to do it. So, but okay. Anything else, guys? Any tickers, stock analysis? I don't care what it is. I got about 5 minutes left. So you let me know what you got and I will look it up for you. All right. Everybody's going to be shy today, huh? All right. Perfect.
Hey, Dave.
What's up, big dog?
I just went through, I don't know, 10, 12 different oil stocks looking for the highest ADR.
Talk to me.
EBF is the highest one I found.
ADF?
EBF.
EBF, thank you. All right, let's take a look at the average daily range.
As in Paul.
PBF. 4.4%. Oh, yeah, but it's just not. See, this is what sucks about PBF. Yeah. So this is energy,
It's the only one that I found.
So this is energy. It is in the petroleum refinery and supplies, heating oil, petrochems, but it's downtrending. So yeah, we need to find a small cap stock. You know what? Go ahead, brother.
Yeah. No, I was just saying this is the only one besides the VLO.
I'm not too proud to show you guys. I'll do shit like this. Small cap stocks in oil sector. This is ChatGPT. I don't give a shit. You know what I mean?
Yeah, I use all that.
Yeah, for sure. I mean, this thing does great. So here we go. It's giving me 5, 6, 7, and we can run through these and figure out, see if we have anything. CRGY. Let's take a look at this. So this has got 3.59%. It looks like a piece of shit as well. We want to find a small cap stock that's setting up that looks very, excuse me, a lot alike XOM. Okay, if XOM takes off, we want to be in something that at least is trying to hold. Let's see, EGY. I remember EGY actually. Yeah, look at this. Okay, so EGY, this is something I want to put on my watch list here. I want to put it on my watch list really quick. Let's put this on my watch list. So EGY, we'll just throw this on my watch list and we'll take a look at it on this stock right here. Yeah, it's not the prettiest looking thing, but you see how it's got this basing top like the other one. I mean, I don't really care for it. I don't like the way it looks, but if XOM takes off, this thing has a pretty good chance of taking off. Let's continue to look, though. Let's continue to look. I want to find something a little... We got about 3 more. PHX. And this might be it. This looks a lot better, but its average daily range is only 2.61%. So, see? You know, it's sometimes it's hard, guys. Sometimes it's hard. This one's got 2.12, so that's garbage KOS. Not to be confused with KOSS. Nope, that's all it's giving me, so I still don't have much. You know, if you guys find a small cap stock, something that moves higher average daily range of 4%, you know, message me. Let me know. I want to know about it. But I'm going to cut that off now because we're bearing in on 10 o'clock. I want to say thank you to each and every one of you. I want to say appreciate you, Dan, Bob, and Beef Suey for bringing up all those stocks for me, those defensive names, so we can look into it. And Dan, Bob bringing up XOM, that oil, how close it is. Guys, I'm risk on, but there's nothing to buy. There's nothing to buy. And I hate to be that guy. You know what I mean? I want to be the hip coolster. Yeah, buying stuff. Oh, things are great. Things are not great, okay? We got a lot on our plates right now. And I'm going to need further confirmation. I am. And I'm going to get real picky here, you know, with what I buy and what I sell. Especially after, you know, I was trying to buy in a downtrend after I told everybody to stay the hell out of the market unless you're finding trend and base breakouts when we're above a 21-day moving average after a follow-through day. And here I am back here trading like a dumbass. I lost quite a bit of money, you know, and I'm not afraid to tell you guys. I'm not afraid to say it because that's what a real trader does. Okay. He mans up. He lets you know when he's fucked up, and I messed up. All right. So I'm very selective in what I buy and what I sell because I don't want to ever make that mistake again because you're a loser unless you're learning. I'm learning from my mistakes. Okay. I gave back quite a bit, but I'm still here kicking. I'm still here fighting. Still here making money, baby. All right. So I hope you guys have an awesome night. If you guys have any questions, throw them out in the general chat. We'll be happy to go over them with you. And I hope you guys have an awesome night. All right. And one last thing. Make sure you hit that like and subscribe. Down below, click the link tree. Click that link tree. Download this TraderView app. It's absolutely free. But if you sign up for the Essential Plan, you're helping this guy out a ton. So thank you so much. Like and subscribe. If you want to be here for more, go to the Discord. Join it up. Everything's free. Love you guys. Peace. $1,500 in less than